Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, December 9th, 2022. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. You'll notice here, so far this month, we've had a rejection at the previous month's high and close, which also corresponded here to the previous, or rather yearly VWAP here. That rejection has pushed price back toward the previous month's midpoint. Didn't quite get there just yet, and we've now had a few narrow range days here at the lows of this move. We're sitting just above the 3900 level, 3900 previous month's midpoint, and also kind of a key level in the charts. It's that FOMC key level from September 21st. By the way, we get another FOMC key level in about 3 trading sessions. So next Wednesday, December 14th, we're going to get ourselves another FOMC key level, our last one of the year. Right now, again, this is a big time level right here, 3,900. You know, if we fail at this zone, you're looking for another push of 200 points down to 3,700 at the very least. An ability to test this area and reject it would suggest a snap back to 4,100 as we stay in this 200-point distribution. Right now, the ES is trading in 200-point distributions, 37 to 39, 39 to 41, 41 to 43 would be the upper end, and 37 down to 35 is the lower edge. So right now, 3,900 the key level to watch here for today. If there's a failure to hold the previous session's midpoint for any stretch of time later on in the day, that could lead to an outside day down, as an early rejection has occurred off the PPI number. PPI coming out a little hotter than expected, and that led to an initial push to the downside. But for the most part, still in the 3-day narrow range. If we take a look here at the NQ, you'll notice right here again, similar price action to the ES, an early failure here after the PPI number, pushed price back into the now developing 3-day range. You've seen a rejection of the previous month's high and close back toward the previous month's midpoint. Not quite there yet, but an expanding range that has developed. You know, if we were to come down here and see a rejection, we could see a snap back up to 12.2, maybe trade and continue to trade within that range. So a big time level right here. 11.4 is similar to the 3,900 in the ES. A failure at 11.4 opens up 10.6 ahead. Let's take a look now at crude oil. Crude oil right now higher by nearly 1%, but it continues to hold at the lows of the year and below the 75 edge. This is the previous year's close price. That's about 75.50 or so, and so far that area has been offered. 75 just below it has been the edge, and we're below that area as well. Inside day right now, narrow range inside day. Today's range currently 41% of average. Everything is still pointing to the downside. Even if we were to see a little bit of strength here, strength within a down move here could still be defended for a continuation. 75 is going to continue to be the key level to watch here. If this thing can't get above 75 or 75.50, the previous year's close price, then we're looking at a continuation down toward 67.55. That's going to be our next key level down, 67.55. That's this level here. It is the 50% extension from the key range that developed up above. So 76.25 is that edge, and the failure at that edge suggests a continuation towards 67.55. So that's the next major target down. Even if we see a pullback here within this move, we could see likely selling pressure for another continuation toward that target. All right, let's take a look here at gold futures. Gold right now continues to trade higher within the overall uptrend here that has taken us to the next resistance level above. The next resistance level being 1820 to 1830. 1830 being that blue dotted line. That's the previous year's close price. 1820, or just shy of that level right here, is the previous year's midpoint. So you got the previous year's close, previous year's mid. That's been the target on the way up. Once we got through 1680, we had the 1740. Once we got through 1740, we're looking for a continuation toward 1820 to 1830. Now that we're there, we could see a bit of range bound action. We've gone quite a ways from going 1620 to 1820. That's a 200-point move in about 6 or 8 weeks. Now that we've seen that move materialize, we could see some range-bound action as this thing digests that recent price move, and then we see what happens next. But clearly, if this thing's going to push higher, you got to get through 1830. 1830 here is the previous year's close. Once you're able to push back above that zone, you're into 1880 up above. So that's going to be a big time level for now. We could see range bound action below that level until further notice. Lastly, taking a look here at the YM. The YM right now down about 0.25%, but it's in a narrow 3-day range. We've clearly seen this thing pull back off the PPI number, and what had been support in the form of the 8-period pivot-based EMA is now becoming resistance here in the very near term as this thing is sloping downward. You have 4 days here of compression. That 4-day range suggests there's some good energy. There's some very good big energy here that has played out. Is this going to play out very similar to last time around? Last time we had this 4-day range after a rally, and then you had a couple of days of weakness away from it. You had this 3-day narrow range, and then a Fed-based sell-off that occurred the very next day, outside day down. How is this going to play out this time around? We've already seen a reversal from the highs, and now we're seeing a narrow 4-day range at lows. Do we see some sort of outside day that takes us downward toward the next support level below? The next key level down is going to be 31.5. 31.5, and the failure point are these lows. These lows right here, the lows of the week, 33.435, that's basically the failure point here. That's the top of the key range. You fail at the top of the key range, you rotate to the middle. 31.5 would be that target. Right now, 33.4 is that support level. Narrow 4-day range, narrow multi-week range with a short-term downward bias. Again, this is the type of range after a pullback within a strong up move that could still give us a big squeeze up ahead. So above that 34K level opens up a potential squeeze stop run day. Right now, we're kind of building out as we head into next week's CPI number and also next week's FOMC statement and rate decision. All right, that is it for now. We'll see how this plays out heading into the weekend. Again, happy Friday. Please be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.